So for the recent price, the price per earnings ratio, relative price per earnings ratio, and dividend yield, we came to the conclusion that these values will not fluctuate that much since the safety of the stock is 1 and the timeliness of the stock is 3, which means that the stock is not volatile. Since the projected net profit drops in 2016 from 8,797 million to 8,555 million, we figured that since the earnings drop, the price per earnings ratio will increase since the price of the stock will not change drastically. How we came about determining the recent price, we checked MSN Money as well as Yahoo Finance, and we discovered that their values for recent price of Coca-Cola stock, it is a little bit lower than the value line stock estimate. So going off of their data and their values, we believe that there would be a drop in prices. So we went from 46.65 to 45.12. And yeah, that is how we determined our different values for the first portion of our value line page. So for the financial ratios portion of our value line page, we analyzed previous value line pages for years 2013, 2014, and 2015. We noticed that the estimates from 2013 value line page for the future years of 2014 and 2015, they were very accurate. Every estimate was within 5% of the actual values. We did the same for the year 2014, estimating for years 2015 and 2016, and we calculated all the differences within the values, and we noticed that all of them fell within 5% of each value. So our best bet was to use those estimates for our value line page. Now, in terms of timeliness, safety, and technical portion of our value line page, we noticed that the safety and technical ranks never really changed with previous reports, which makes sense because Coca-Cola is one of the most successful, well-established, well-known brands around the world. With that, the safety of the stock will remain at 1. Now, with timeliness, that was a category that really fluctuated in previous reports, so we decided to look more in depth with that. We divided the earnings growth over price growth to determine if the price performances were strong or not for the past 10 years. We noticed that the company's earnings nearly doubled from 24,088 million to 42,500 million, and similarly, the price change doubled as well from 22 to 23 per share to 43 to 46 range per share, which means that if you divide the earnings growth by the price growth, there won't be any fluctuation within the timeliness. So we decided to keep the timeliness at 3. Now, additionally, for the technical aspect of the value line page, we noticed that the short-term price changes didn't really change that much. It wasn't very volatile, so we kept it at 3 as well. So that's a little bit about our timeliness, our technical, and our safety portion.
So going deeper into our value line report, I'm going to talk about recent prices, capital structure, and then finish off with quarterly revenues and dividends. Looking at recent prices, we calculated our highs and lows to be $47.10 and $40.80. We arrived at these numbers by looking at the April 2016 value line report. We believe these numbers to be the same for our report because Coca-Cola has recently been on an upward trend when looking at its stock price. Not only that, but its safety rating has remained pretty much the same throughout the past value line reports. And this safety rating is important when calculating the high and low numbers. So as a result, we believe these numbers to be an accurate and wholesome representation of how high Coca-Cola stock price could potentially go due to its recent trends. Now, looking at capital structure, we calculated long-term debt to be $26.990 billion. And we took this number from Coca-Cola's website. On April 20th of this year, it released its first quarter earnings report. And we believe these numbers to be accurate because they are coming straight from the company. And not only that, but they are very recent. So this is perfect for our report. When looking at preferred stock, we saw that they did not have any preferred stock, and this came from the quarterly report that they released earlier this year. And then moving along to common stock, we calculated this to be 4.332 billion shares. We took this number from Yahoo Finance, which is a very credible resource for financial information. So we took that number straight from there. Now, looking at quarterly revenues, we calculated the March 2016 number to be $10.282 million. And we took this number straight from the first quarter earnings report that they released earlier this year. It was stated as the consolidated net operating revenue, and because this was such a recent number from April, we believe that this was the best number to use for this revenue. Now, looking at the September revenue, we used a different system when calculating the future revenues. So for the September 2016 revenue, we arrived at $10.986 million. And we calculated this by looking at the April 2016 value line report. From there, we went to the September column and we averaged all of the September numbers from 2013 to 2015, along with the future values of revenue from September 2016 and September 2017. So we averaged all those numbers together and arrived at the total number of $10.986 million. And finally, finishing off with our quarterly dividends. We calculated this number to be 35 cents, and this was taken directly from Coca-Cola's dividend history from the NASDAQ website. Coca-Cola recently increased its dividend payout to 35 cents on March 2016. So that's a very recent time. So because of this, we believe that Coca-Cola will not be increasing its dividends anytime soon, since it just went through an increase. So we believe this number to stay the same throughout the entirety of the 2016 period. And so that is how we arrived at our numbers for our recent prices, our capital structure, our quarterly revenues, and our quarterly dividends.
Coca-Cola, one of the most well-known brands in the world, surrounds us in our everyday life. We see it in the grocery store, on billboards, and all over commercials. Throughout history, Coca-Cola has been a consistently strong brand that continues to expand into more ventures. This is the same for their stock. Just last year, Coca-Cola's revenue, volume of production, and profits increased 5%. One interesting move that Coca-Cola is currently making is their Taste the Feeling campaign. This campaign combines many drink brands such as Diet Coke, Fanta, and Powerade under the Coca-Cola umbrella, making their brand that much more powerful. As I said before, Coca-Cola has been one of the most recognizable and profitable brands in the world. This reflects their stock as well. Coca-Cola has an A++, the highest rating a company can get in their financial strength, and a 100 in stock price stability. This is also the highest ranking a company can get, showing that Coca-Cola is a very stable stock. The stock's price growth persistence is a 57, showing that they have an average growth over 10 years. Finally, the last ranking we gave was 100 to earnings predictability. Coca-Cola is an extremely strong company, and we believe that earnings will continue to stay consistent just like the past. All of these rankings were based on past value line pages where Coca-Cola was highly ranked. We believe that these past value line pages showed a trend that Coca-Cola is a stable stock with consistent returns. Thank you, and we hope you enjoyed our presentation.